Aloha, big wave trading family. I hope you are all having a nice weekend. You should be following Friday's session. That is about as good as it gets. We're looking at the Russell 2000, well, at least the Russell 2000 chart as per Telechart, since they don't have a Russell 2000 chart. But if you go to any other data provider that has the Russell 2000 chart, you'll see that it closed at its high of the day. You can see the NASDAQ closed at its high of the day. You can see the New York Stock Exchange closed at its high of the day. You can see the Dow Jones Industrial Average closed at its high of the day. You can see that, I think the NASDAQ already did, the Dow Jones Industrial Average, blah, blah, blah. I already forgot which ones I went through already. And the S&P 500 also closed at its high of the day. Actually was off by 3 cents. How dare it? But bottom line is, Friday was as good as it get. Strong open, consolidation most of the day. Uptrend from noon to the afternoon into the close, where the markets close at the high of the day. Have some new long signals, even better. Only got 2 full sell signals. We'll go ahead and just get those out of the way. This chart's irrelevant, what you're looking at, IUSB, due to all of the dividends that it has been giving out. IUSB, following Friday's session, is the actual first day that it has traded below its 200-day moving average since I went long back in December. The ETF is only leaving me with about a 3% gain, but I collected a lot of dividends along the way in the process. However, I was completely knocked out of IUSB back in September. But like I said, this chart is irrelevant. None of this matters. You need to go look at stockcharts.com or go look at the chart at Interactive Brokers or E-Trade to get the real tell of it. But the bottom line is IUSB is closing below the 200-day moving average. That's a full sell signal. If I go long any stock, once it gets above its 200-day moving average and trades above it for a significant period of time, the full sell signal is always a close below it. Same if we ever go long a stock above the 200-day moving average. If it closes below the 200-day moving average, that's it. It's always the final ultimate sell signal. Confirmation closes below the 50-day moving average after stock's been in a long uptrend on heavy volume and red bop. That's one. But the ultimate one, if there's never one of those below the 50, is that close below the 200. So IUSB was an ETF, basically a hedge back in December. It just kept working. It failed. SPXU, another hedge that I went long immediately on Friday following Thursday's signal. Immediate failure for the SPXU hedge. That's 100% full sell signal. Now with these real index hedges, I do those partialing out, 50%, 50%, 50%, until I only have one share left and then it's completely gone. But IUSB and SPXU were the only 2 negative price action sell signals following Friday's session. They're both basically hedges. That means every single stock I am long and or are tracking, which is nearly an astronomical 300 names, all did well. Every single one. Every single one that I've recommended is doing fine. If that's not a sign of a strong market, a market that ultimately wants to go higher, I don't know what is. Sentiment's pretty out of whack, so we got to be careful here, especially if you're underinvested. Don't feel like you need to chase the market. Let it come to you. And with that being the case, here we go to the new round of long positions. Keep in mind, all of these, even though they're higher quality names, ESIO, ADAP from the Perfect Speculator Scan, OSTK from the Perfect Speculator Scan, EME Can Slim, ASPU from the Perfect Speculator Scan, PRMW Can Slim, and back to ESIO, which is Can Slim and Perfect Speculator. They are all risky to one degree or another. ESIO is extended from its 10-day moving average. ADAP is extended from its 20-day moving average. OSTK is extremely volatile. Just this little price bar has an intraday range from that close to high of right around 10%. It's a very highly volatile name. EME has earnings on Thursday, so that makes it risky. ASPU is extremely thin and sometimes can be very thin and can have some wild intraday movements as the market maker likes to shake stop orders. And PRMW is extended from the 10 and 20-day moving average. So everything is risky, even though everything's high quality. There is no high quality safe signal. But we'll start out with ESIO. ESIO, I want to get long at 26.44. First cut loss for me, 25.02. My final one will be with the gap fill here at 23.15. If you go long this stock And if it's anything heavier than the asset allocation I recommend, which by the way, I can't get long, the most I can put to any of these brand new high quality long signals, 0.5%. That's it. I am maxed out, especially after Friday's session. Had very few stops trigger intraday. So 0.5% is all of the capital that goes to each and every one of these signals you see. But still, go check the new positions page for the recommended asset allocation. This will be the highest one at 2%, 2644, 2502 first cut loss, gap fill 2315. And then OSTK, want to get long 77.65. It's not extended from the 20-day moving average, but why am I not using the high of the day? Because, like I said, very volatile, and also the moving averages are going through that car crash thing. You see where I talk about where like they all crisscross, they all crisscross, they all crisscross, and they all crisscross again. It's kind of like a big mix car crash, but still ultimately the stock's trending higher. Some clear support levels. I want to get long at OSTK 77.65. First cut loss level for me 66.69. Then I will probably split the final two stops between 61.09, have 25% there, have another 25% at 57.99. You, especially if you're a non-experienced investor, I don't recommend taking the stock at all unless you're going to use maybe 71.40 as your first cut loss level and then 66.69 as your final cut loss level. Very risky. The highest quality, and that would have been the safest overall signal, was EME. It's a CanSum quality stock. Was also confirmed in my price volume BOP surge scan. Not extended, right at the 50-day moving average, the flattening 50-day moving average. Normally you like to see that uptrending, but whatever, flat's good too. But earnings, like I said, it's on Thursday. It makes it risky. So normally it would be 3%. You got to half it for an ad signal, 1.5%. You got to half it since earnings are less than a week away, and I'm deciding to go long this stock, 0.75%. Want to get long, 83.62, the high of the day. First cut loss level for this ad signal for me and probably for my entire position. Haven't looked, but I guarantee that's what it is. 81.41. Final 79.23. Once again, for this ad signal, especially with earnings coming up, if this low goes, you need to be out of it. Don't stick around. ASPU, you can see the longer term uptrend in this stock from the October-November lows. You can see it from the February 2016 lows. You can see it here from the March lows. And then you can even see it here from the September lows. Either way you skin this cat, there's a potential for a huge percentage move if it just moves up a little bit. Sadly, ASPU is thin. It can be a liquid. It can be volatile, so it's risky. Want to get long, limit order 890. I'll be using 3 stop levels with my already current position. 812 right here, 786 right there, and 732, which I don't recommend anyone use back here. But like I said, I already got a earlier position in it, so I'm willing to give it some room to work, since once again, I cannot allocate the full capital because I'm fully invested. Everything's working. I mean, this is insane, guys. And normally we don't have uptrends like this. You get pullbacks, you get ebbs and flows. You would never see me tracking this many positions. In fact, it'll probably never ever happen again for the rest of my lifetime. This is an anomaly, an outlier, a once in a lifetime event. So keep all of that in mind. I have time. This is what I do for a living, and this is what I enjoy, passionate about. I can do stop adjustments for 6 to 7 hours every night. I could run $100 million probably by myself if I only did big cap liquid stocks. I would use options, a lot more leaps. You can really push my methodology by using margin and using options in some of these trades. I just keep it safe. I have a risk averse, I guess, personality now after everything that I've gone through personally in my life, and it's just the way it is, and it's the way I trade. But you can always push it and be more aggressive if you want, but if you do that, you need to make sure you're always obeying the first stop. So if you go long ASPU, but you want to go full in on margin and use all of your account capital in it, you got to obey that one and only cut loss. The first cut loss I recommend, 812. That's just how you have to do it. PRMW, same thing. PRMW is an ad signal for me. I'm going to get long at 1310. My first cut loss for this ad signal is 1246. My final cut loss is 1228. However, if you really push it, if you want to really get long, your first cut loss should probably be 1283. And that way, if it doesn't move higher immediately, you're out of half. Then you're out of another quarter if it gets below 1247. And then you're out another quarter if it gets below 1229. And that's just maybe a safer way and a more, I guess you could say, aggressive way to use this methodology, but you can always adapt it. I just go the safe side. Cash for right now for me, because we're so extremely overbought. I know when to go heavy into margin, and that's after a significant downtrend, get a fall through day. I got nice charts. I'm coming from an oversold condition in the market. I'm nowhere near there. We're very it's very risky up here. The chance of a pullback is extremely high. When it happens, it could be very sharp and volatile. So right now, I just want to play it safe. It's just the way I do. And on that end, you always want to take profits on the way up. We'll end this video lesson with all the 20% sell signals. These are all stocks that have been uptrending straight higher. They're now producing RSI 14, extremely overbought profit taking signals. When I buy a stock and it's not an overbought condition, once it uptrends a lot and the RSI 14 hits 80, 79.50, 84.50, 89.50, and 94.50. So basically when RSI hits 80, 85, 90, 95, I'll always be taking 20% or 25% profits. Especially 25% is if volume is huge, biggest volume of the entire uptrend, biggest price move of the entire uptrend. 20% any other way. Tree is triggering one of those 20% profit taking signals. Got to lock in 20% at the market on Monday. EDN is doing the same thing. Got to lock in 20% at the market on Monday. NVO doing the exact same thing. 20% at the market on Monday. HDNG, RSI 14 extremely overbought profit taking signal. 20% at the market on Monday. Robo, 20% at the market on Monday. ICU, 20% profit taking at the market on Monday. PayPal, 20% at the market on Monday. And CAR, 20% at the market on Monday. So quite a few 20% profit taking signals. It's probably indicative that this market is extremely overbought in the short term. Even more of a reason to expect a pullback when you have 1, 2, 3, 4, 5, 6, 7, 8 stocks trigger 20% profit taking signals. All right, everyone, enjoy the rest of your weekend. I'll see you in the chat room on Monday. Aloha.